Avantis just made headlines with a sharp rally after its airdrop. But is this momentum already fading? The charts suggest a powerful move could be right around the corner. Welcome to the Daily Blockhead, where I cover daily crypto news, trending coins, market shifts, and the global events shaping today's crypto. Now, let's jump right into it. If you are unfamiliar with Avantis, it is a relatively new derivatives trading protocol that has been gaining traction in the DeFi space. What sets it apart is its focus on offering deep liquidity and leveraged products in a decentralized way, basically giving traders tools they are already used to on centralized exchanges, but without the middleman. The airdrop earlier this year put AVNT tokens into the hands of its early community, and since then, it has been carving out a large share of the futures market. The growing momentum in the Avantis ecosystem set the stage this past weekend for significant market activity. Over the weekend, Avantis experienced a sharp rally, driving the price into the 0.618 Fibonacci extension level at $2.60. This region has since acted as a strong resistance, with price failing to break above despite several attempts. Avantis' price jumped after its airdrop, boosted by rising investor demand and growing futures market share. The repeated rejections suggest that the impulsive phase of the move has concluded, and the market is now entering a consolidation period. That $2.67 level is no joke. For traders, the 0.618 Fibonacci extension is one of those zones that often acts like a brick wall. It's where momentum runs headfirst into resistance and either powers through or stalls out. And in Avantis' case, we've seen rejection there multiple times. So what does this tell us? It suggests that the impulsive phase, that big vertical jump that came right after the airdrop, may be cooling off. In other words, the quick money phase of the rally is ending, and we're entering something more controlled. Now, that's not necessarily bearish. Avantis didn't collapse back down after hitting resistance. Instead, it holds near the highs. And that strength comes from more than just hype. The airdrop brought attention, but the futures market demand and actual investor inflows have been giving the price some backbone. When you take a step back, this kind of pause is actually healthy. Markets don't just move straight up forever. After a pump, you want to see that consolidation, that sideways grind where weak hands get shaken out and stronger holders start to set the tone for the next move. Avantis is now consolidating in a tight range. This setup mirrors a previous consolidation phase where price coiled into an apex before breaking out into a bullish expansion. This is really where things start to get interesting. Right now, the charts are showing a classic pennant move, that tightening triangular shape that forms after a big move up. It's basically the market catching its breath, coiling tighter and tighter until it eventually breaks in one direction. If the pennant breaks into the upside, the measured move target point is $3.30, derived from the length of the prior rally leading into consolidation. That's nearly a 30% move from where Avantis is currently trading. And traders love this kind of setup because it's not just about hype, it's about structure. The idea is simple. If the market rallied strongly before and then builds a consolidation pattern instead of collapsing, it is often fuel to run that same distance again once it breaks out. Now, to be clear, consolidation patterns don't always break upward. Sometimes they fail, and the downside move can be just as powerful. But when you see prices holding near all-time highs, instead of rolling back down, that's usually a bullish sign. And right now, Avantis looks more like it's pausing than collapsing. Another bullish signal comes from derivatives data. Open interest in Avantis has been rising in tandem with price. So here is a nice graph that you can see Avantis's price and open interest in green, and you can see them almost running in parallel. This suggests growing demand and reinforces the bullish bias, as traders are willing to commit at higher levels. That is an important piece of the puzzle. When you see prices going up, but open interest staying flat, that usually means the move is being driven by short-term traders. People jumping in and out without really committing. But when price and open interest climb together, that is a much stronger signal. It tells you fresh money is flowing in. Traders are putting skin in the game, and they are willing to hold at these higher levels. This influx of committed capital provides a strong backdrop for Avantis' current technical picture, which is showing signs of a potential breakout. Let's sum this all up. Avantis slammed into resistance at $2.60. It cooled off and is now consolidating into a tighter pennant pattern. If that setup breaks into the upside, the charts point toward $3.30 as the next logical target. On top of that, open interest is climbing right alongside price, which suggests this rally is being fueled by real demand, not just short-term speculation. The big question is whether Avantis has the strength to push through that resistance and kick off the next leg higher, or if this consolidation drags on longer. Either way, the signs are pointing to a decisive move ahead. So what do you think? Will Avantis break above resistance and push towards $3.30? Or are the bulls getting ahead of themselves? Let me know your thoughts in the comments below. If you found this video helpful, please give it a like. It is one of the easiest ways to support the channel. And if you're new here, don't forget to subscribe for daily crypto updates. As always, thank you for watching, and I'll see you in the next one.